Ja. Ja, ja, ja.
Who's that talking about?
I think it's a mistake. Let's just mute everyone, Scott, and they
Uh,
can mute themselves.
Okay, you should all be able to hear me. If you can just confirm if you can. I got some good news. I'm not going to spend an hour trying, so we're all good. We should be better than last week in terms of the process. Right, let me get open what I want to share with you. So this is the Q&A for countries. So I just want to talk a little bit about countries and what we went through. And Spa, I'll tell you a funny story before we get started. So Kelly said to me, she went and Googled it and ChatGPT and whatever. Like, don't worry, you can switch off the little ping, ping, ping thing because it's so irritating. Every time someone comes in, it goes ping, ping, ping. Anyway, so I switched it off. And then this week I was late for every meeting I went to because I don't know about you, but you'll have your Zoom room open. But like, if it doesn't ping, I don't know the person's there. So it's like I was in the room, but I was late for every meeting. So anyway, we're back to pinging in terms of that process. Right. What I want to talk about today is countries. And what we're going to do is that, again, we've got twofold to this because I'm not only going to talk about countries, but time permitting, I also want to go into commercial real estate and the next white paper that we've got from the Investor Summit. So my message I want to get across in terms of countries is that I've been doing this 28 years and I've traveled around lots of different countries. I've traveled more than most in terms of two different countries. And I think what's really interesting is that there's some golden rules that we've got in place. So, and I kind of went through those in that presentation, in terms of different areas, what do you look at, etc. I get asked all the time, I got a friend in Kenya, I got asked this morning, there's one in South Africa, there's someone in Vietnam. So there's lots of opportunities that are out there. But to move into a new country is one of the hardest things because you've got to understand the legislation and everything in between. And something I didn't say on Tuesday, which I probably should have, is that you've also got to understand the language and how the legal system works. So it's very easy for me to do business in England, okay, because I can speak English. And it doesn't take, the South African property systems based on the British property system to some extent. It's much more efficient. The English one is archaic, but anyway. And even England is much more efficient than both those countries, but it's still a fairly similar system. I will tell you something funny, which most people don't know, is that the English language in Australia, in England, in South Africa, and America, the word for when a property transfers, so some call it completion, some call it settlement, some call it transfers. In 4 different countries, they have 4 different languages, 4 different words in the English language. It's ridiculous. Okay, can you imagine if you're bloody German or Spanish trying to figure this shit out? It's like just tell me what it is when the house moves into my name, and it changes. Anyway, why I wanted to start with this is that the world's a big place. And just because we didn't bring up Botswana, I'm literally picking the first country that came to mind, doesn't mean there's not good opportunities in Botswana. But if you look at it at a holistic level, and if you look at where the biggest capital movements around the world go, they are going to the countries that I showed you. And there's reasons for that, and there's substance behind it. And as an example, in South Africa, some South Africans go, oh, I want to invest in South Africa, and I want all my eggs in one basket. And then Garth Wellman always rightly points out that the South African GDP is 0.5% of the global GDP. We're literally a cork on the ocean, an irrelevant cork on the ocean. It just goes up and down, depending on what else is happening in the world. And so when you're looking at investing, you want to be looking at a whole bunch of things. But what I tried to do on Tuesday, which is really important, is I tried to show you the substance of how you could go and do it. So, I mean, you could buy my book, or I could give you my book. I don't care. I'll give it to you. You can go read it. You can go and Do all the research yourself. I showed you 2 years ago how I went and did all the research. It took me weeks to do it. And you can come up with your own conclusions. Or you can partner and copy, and it's a far easier way to be able to do it. Now, to be frank, you don't have to do Wealth Going Global to be able to get the list of the 20 countries. I mean, I can just give it to you. But I do think there's value, and I'd love your opinion in the chat box, in understanding where it comes from. Because I think that the problem is with the most financial advisors is they'll say, put your money there. And you're like, okay, why? Well, you don't even ask why, because you don't even know what to ask. So you go, okay, cool. And you put your money there. Isle of Man or something. You're like, boom, off you go. And what I'm trying to do is to show you the questions you should be asking below the scenes. Now, whether you're asking me those questions or whether you're asking someone else those questions, I don't really care. But what I'm trying to show you is the level of substance and detail that you should have and that you should be doing, or at least if you're not doing it, that someone else is doing it. Does that make sense? Like the person that you're partnering with is doing it. Does this make sense? I just want to make sure, because I'm very conscious that on Tuesday, I probably overwhelmed the majority of people. At some level, I even overwhelmed myself. I won't lie, okay? Because no, but if you think about it, there's so much data out there, and to try and present it in 90 minutes is virtually impossible. And to go between residential, commercial, and alternative assets, like there's a lot of data, and so what I tried to do was to show you the substance, to try and simplify it. And the reason I want to start today with the Q&A with literally this is, and I'm really trying to do this every Friday, I don't know if you notice, I always start right up front while your brains are fresh and everything in between, to just tell you the real message. Then we can go into the detail. But I think if I do the summary at the end, your brain's already fried and you've missed the summary. Does that make sense? Yeah? Okay. So that's the first thing I just wanted to mention. And we'll go back to some of those countries and whether anyone has questions. The second thing I wanted to mention was, if you're not using AI now, I strongly, strongly recommend that you figure out how to do it. Okay, and I've invited you to join us on Wednesday evening at 8 p.m. South African time, so that'll be 7 p.m. UK time, so 7 p.m. London time. And one of our mastermind members is going to be doing a presentation on using AI. So, and what's interesting is that this is using AI for 40 pluses. Because in fact, I'm almost sure that almost everyone here is over 40 type thing. So this is not like the 20-year-old that was kind of grew up with a cell phone. This is for the rest of us that actually are learning about tech, etc. And the book, AI Driven Leader, has been written for C-suite executives and kind of late 40s, 50s, 60s to understand what is AI and specifically how can you use it and how can you ask better questions to get better results. And what I love about Judy, and I'm listening to a book, I'm giving a bit of a secret away for the mastermind members, but our next book for next month is going to be called, I assume you all know that, well, do you know The Diary of the CEO, Stephen Bartlett? Anyway, so a recommendation of a book I was given was The Diary of the CEO by Stephen Bartlett. And I started listening to the audiobook this morning while I was writing, and it's incredible. It's like the 33 lessons for life. Anyway, so for mastermind members, that'll be our next book to study. But in the last month, the book to study was The AI-Driven Leader. And Judy has taken the third lesson out of that book, which is if you ever want to master something, teach someone else. So she's taken the book and she's going to teach all of us. So I would strongly recommend you join up, because if you want to understand the power of AI, how's this to explain it? So when I wrote this book, it took 18 months of research, 18 months to research and put this book together. When we did Wealth Going Global, the first version in 2023, it took a couple of months and certainly a couple of weeks per module. So per module, like when I did the country module, it took a couple of weeks to look at all the data, to analyze it, to go find all the different pieces of data. When I did it now, it took me a couple of hours. Like, I don't know about the rest of you, but I find this absolutely fascinating. Like when you think about it, like I literally said to ChatGPT, take this entire book and read it and understand the philosophy. Take Clem Sunter and take the entire transcript of the last time he spoke and understand everything that he said around scenarios, flags, probabilities. Take GIDS, the Global Investment Due Diligence System, which is our advanced version on top of this book, and go and take all of those frameworks. Now, based on this source data, so I told her where to go and find the data so that it's not getting rubbish in, rubbish out. And based on these frameworks and models, find me the information. And it did it. Like, I don't know about everyone else, but I just think it's so flippin' cool. In terms of, so yeah, my second thing is around AI. And I believe vehemently that where people with experience have advantage over youngsters is we know how to ask the right questions. So for all of us that are here, what I'm trying to teach you is how to ask the right questions. And as long as you can ask the right questions, AI will give you the solution. Amazing, huh? So we've gone from 18 months to a couple of weeks to a couple of hours. Flipping amazing. Okay, so that was the second thing. And the third thing for me was, now that we know what the different countries are, what do we actually do with it? So let's just go back to a couple of the slides here. So, I want to share this with you just in case you're not aware of it. Oh, and I also want to update you of a mistake I made. So if we go here to Wealth Going Global, here's Wealth Going Global. And if you go to module 2, what I do on the day is I put everything here. So you've got the recording, you know which one you're dealing with, what is the mission. You can go and read about everything I just said in terms of AI. You've got the global investment due diligence system, and then you basically got the top 20 residential, you got the top 20 commercial, and you got the top 20 alternative assets. You've got the action items, silver, and then you've got all the resources. So you've got the investment strategy sheet, you got Clem Santa, the latest scenarios, you've got module 2, the summary. Again, I'm super proud of this, by the way. For those people that are time poor, I take every module and I literally summarize it into 2 pages for you. So if you don't have time to watch the whole recording, it just basically explains, oh, sorry, not 2 pages. This one's a bit longer because it's got all the graphs and stuff. But basically everything's here. So if you don't have time to listen to the whole thing, here's the entire synopsis with all the tables. Then you've got the PDF. So you've got the PDF of my whole presentation, and you've got the global property system, which is the calendar. So hopefully everyone knows about that. So let's just go back to the countries. So again, these are the countries. So to where I started off, like South Korea, Seoul, and Philippines, I've been to both those countries. I've never considered investing in either of those countries. I don't know if anyone else has. Look, personally, I'm not really interested in residential at all. And if I am going to do residential, the markets I would look at would be the UAE. So I'm not interested in going to Dubai. And I know I'm repeating stuff I said on Tuesday, but it's really important that this is heard, is that I want to go to Dubai. I want to invest in Dubai, but I don't want to invest and just buy an apartment like a mom and pop or retail investor. I want to go and do it at an institutional level. So again, if like in London, you'll see here London, like the opportunity with Gary Sachs and in Zone 2 London, West Acton is amazing. I know we're still trying to close the deal, but it's an amazing opportunity. So you can see there, I've got London, United States, so again, multifamily in America. I've got Portugal and Spain, mainly because they're high up here. And I know that Paulo, my CFO, father invested in Portugal about 10 years ago, and he's tripled his money. So I don't know, maybe we've missed the boom there. The problem is I don't have any partners in Dubai, Portugal, or Spain. So those 3 markets at the moment, even though they're on this list, there's no one that I know, like, and trust in Dubai, Portugal, or Spain. Whereas in America and England, I've been investing there for a long time. So that would be so just before I go any further, any questions on residential and kind of what we spoke about? Just checking here quickly.
Shipman's raised her hand, Scott. And also Tracy asked a question about the homework, the kids. I don't know if you want to answer it while you open there.
Okay, let me do that. Tracy, do you want to go first? Oh, sorry, Sherman, do you want to go first?
Scott, I was just wondering, with this whole new thing with the EU and the CBDC and digital currencies and all that, how safe is Europe right now then for investing, or even as a second country? Your opinion, of course. I don't know what's going to happen till it happens, because there's so much noise about it.
it's an interesting question, and I'll tell you what, I'd like to ask you the question again after Tuesday. And I'll tell you why. I know James well, and I've worked with James Painter since at least 15 years. I mean, he wrote chapter 2 of this book. So it's probably longer. I actually don't know how long I've known him, but it's I probably knew him for 5 years before he wrote the book. So it could be closer to 20 years. And he's going to tell us on Tuesday that we need to be holding euros because it's going to appreciate. And again, I don't want to give numbers. I'm telling you what I heard last time he spoke to our mastermind. Somewhere between, I don't know if any of the mastermind members can remember, but it was somewhere between 20 and 50%. The euro was going to appreciate against the dollar. By the way, the pound is equally expected to do well, not as well as the euro. So, Shimon, there's different angles that you look at here because I definitely want to be in European property and European assets. Personally, I would prefer to be in commercial assets. Residential in Europe is very, very tenant friendly. I mean, Germany's a nightmare. I mean, I don't know. I know I'm standing on political toes here, but it's the whole of Europe is very socialist. You know what I mean? So it's very difficult to get rid of tenants. And England's going, pick me, I want to be just like them. So they're becoming exactly the same. So for me, residential is something to be very careful of, unless you've got proper institutional partners that know how to manage it properly. On the other side of that fence, we did have a commercial opportunity in Germany last year, and a bunch of people were like worried about the Ukraine war, like what happens if Russia invades? And, I mean, I think we could stay here all day long coming up with scenarios of stuff that could go wrong, which is why I always sort of defer back to diversification. So I don't know if I'm answering your question specifically. I do think that we need to be in European assets, obviously not our whole portfolio, a piece of our portfolio, but it's about finding the right partners and the right assets.
Thank you. And we are going to do paid with you, so that's fine. Thank you so much.
We'll try. I mean, look, I tried to get into Germany I don't even remember now, but it was before COVID. We've been trying to get in Germany for a very long time. So the part I didn't answer was, like, I've always done England, Australia, South Africa, America. They all speak English. It's easy. Go to Germany. I don't speak German. I don't speak French. Every country has a different legal system in Europe. I know it's getting better now with the EU, but it's still difficult. So it's taken us a lot longer to get into Europe. And we did have an opportunity in Germany last year, but it actually fell over. It was irritating. I had my money tied up for a year and then didn't go ahead. And the point being is that same partner is trying to get good opportunities in Germany, but it's a very, very flat market at the moment. So the sellers aren't selling and the buyers aren't buying. It's kind of just stuck in neutral land. So anyway, yeah, we're always looking for opportunity, and Europe would certainly be a place we're looking, but I'd say more in the commercial space than the residential. Okay.
Thank you so much. Thanks.
No worries. Tracy Miller said the homework silver says get to know GIDS. Where do we get to know GIDS? Okay, let me go back to that. So, okay.
We can't see your screen if you're sharing.
No. I was just reading what was there. Was that in the PowerPoint? Because what I've got here is the silver is review and adjust your country data to suit your opinion. So again, that's where you would go and use the spreadsheet, global property system, and you would go in and, like, I don't know, like, you might disagree. I mean, that's the beauty of the spreadsheet. You can change the numbers to be whatever you like, and it'll play around. Like, I think I showed you, if you change, just let me show you. So watch South Africa. If I make this naught, it immediately moves. I don't know if you saw that. Can you see South Africa's moving? Hang on, what's it doing now? Oh, you saw Australia moved. I'm buggering up my sheet here, but anyway, you can see how it moves. So it's an interactive, it's quite a sophisticated spreadsheet. It's why I don't share it elsewhere. You can literally only get this if you do Wealth Going Global. But I think all I was trying to say is you can play around with it if like, you disagree. If you think there's no risk in South Africa, then remove the risk and see where you want to invest. So that's that one. Then choose your own countries. So that's where you literally go in and you've got your form and you can literally choose them. I mean, I share mine just from a transparency perspective. So it's interesting. And again, I'm showing you, I don't just go for the top 5. I mean, I think India is a massive opportunity. But I don't know if you know this, and it's changing, but up until like quite recently, and still a problem, is that in India, you can't get rid of the tenant. So I come from Durban, which has the biggest NRI, which is non-resident Indians in the world. And a lot of Durban people buy property back in India, but none of them rent the property out because you can't get the tenants out. So again, it's like it might be in the top 4 in this list, but for me, again, I don't have the partners. And if I was going to do Indian property, which I want to, then I would do commercial. So that was, yeah.
Do you have that problem in the UK where you couldn't get a tenant out of the property?
I've got it right now, Alan. I literally just paid. Don't even get me started on this. Like literally this week, I paid the lady. Her rent is £635 a month. She would not leave.
So what is your advice then? You can't put up with that. How can you go and buy property in the UK then?
No, so you do it at an institutional level. So you do it through the likes of Gary Sachs, and you do it at where you're doing it. So they've got a whole sophisticated system. I'm a mom and pop. What I was doing was mom and pop investing, and I mean I did really well out of it. It was house of multiple occupancy, But it's time that ship has sailed.
So what gives them the right, if we invest through them, what gives them the right to kick renter out of instead of like what's happened to you in the UK? What's the difference with them? What privileges do they have?
It's interesting, Alan, that you asked this question. And if I'm 100% frank, I'm pretty useless with admin and making sure my compliance is up to date. And so to deliver a Section 21, you got to have all the paperwork in place. And I didn't hand them a renter's handbook when they moved into the. I didn't even know you had to have one, to be honest. And like all this little red tape, quite frankly, that I didn't. I mean, I've been a landlord for 23 years. I didn't know how to do that. And so when actually I had to go and try and use the legal system, it was going to take months, literally months. There was only 2 things that got her out. One is we paid her £4,900. She's leaving on the 18th of August, so touch wood, she's not out yet. But we paid for her Airbnb, so she's moving into an Airbnb. If anyone can explain this to me, please do. So we offer you £3,000, you say no. Your rent is £635 a month, just to be clear. You ask me to pay for an Airbnb for £4,900 for 1 month. Why would you not take the money and go on holiday to anywhere? Like literally £5,000. Like not even going to her, it's going to Airbnb. Makes no sense to me. Literally, it's illogical. Anyway, I did it. So we signed all the paperwork. So back to your thing, Alan, we now legally got a signed agreement. So we're back on board. But you know how we got to that? And I've got to tell you this because it's funny. So I think I might have said this last Friday because I only executed last Friday afternoon. So I started off with my father's just passed away. It's his 20-year anniversary. And he taught me where there's a will, there's a way. Look, you've got 2 options. One is you take our nice settlement to pay you, put you in an Airbnb, blah, blah, blah. Option 2, I will be there by next weekend and I'll be living in one of the rooms. And I'll also be making sure that all the other rooms are filled with tenants. And we will be doing compliance. Because you know that we don't have our compliance up to date. So I'll be getting all the compliance up to date. I basically just said it's going to be so horrible. Take option A. and that's where I got a huge smile on my face because that's just the way we do it in South Africa. Like if you're a cowboy and you live in a cowboy country, sometimes you have to be a cowboy. And anyway, she decided she didn't like cowboy land. So she went back to her Airbnb option, which she had turned down the night before. So anyway, I just... I get great enjoyment out of the story, quite frankly. Anyway, let's go back to countries. But I think, Alan, it's a very
sorry. Can I ask you one? Yeah. Can I ask you one other question? Would you recommend if you've only got investing like in property now and all your shares in that are invested in the USA? What is your advice on that? Are you going to speak with all this Trump issue and all that? I mean, I think it's an important thing. Most people don't invest in euros or markets there. What is your advice where people have got all their money in property there, but all the investments in the USA? Is it an area of concern?
Yeah, so look, I mean, again, everyone has different opinions, but I mean, this guy, Peter Schiff, wherever he's gone now, this guy here, I mean, at that investor summit, Peter Schiff, he was like, because obviously the majority of people there, I mean, there were 130 people there and 124 of them were Americans. And 5 of them were from Singapore, and then you had me. So They're pretty much all Americans. And his feeling was, don't have all your money in the American market. Like you should have money in England, money in Europe, etc. So I think I'm answering your question, Alan. It is about diversification and not having everything in America.
Okay.
Cool. So let's go.
Thank you.
No worries, no worries. So Tracy, I hope I answer. Oh no, I didn't really answer your question. So what I need to do, which Tracy's asking, is to put up the GIDS system. So let me show you quickly. I'll share my screen now once I've got it open for you. Yep. So what I'm going to do, I will just share with you, Kelly, if you can just make a note, because I didn't actually do it. I'll share with you the documents about GIDS, and I'll just put them. I was actually going to do it later in the thing, but because you're asking, I'll put it here under resources for week 2 as well. I do it under partners, but I will do it now. I'll just do it twice. So if you want to go read about GIDS, you can, because what you're asking is it's here in the gold. Understand the GIDS to be used. And then you see, I said more detail in module 5, but I'll put it there if you want to go and read it in terms of the process. And Kelly, I noticed here, brochures in the attachments below, and it's not. So we need to add that, please, in terms of that. So there's 2 action items to do there. Okay, let's go back up now. So let's go to commercial. So this is the one that I find really interesting. And there's 2 things that I wanted to share here. Well, there's 3 things I want to share. The first one is that it's interesting based on the data that America came up twice, which is fascinating. And I think most of us know how big America is. So there's markets within America that are bigger than most European countries. Then you got England, then Germany, then Canada, then Australia, then India, then Dubai, then Spain, then Japan. So it's really interesting to me based on the data what the top 10 are. I don't think we'll waste time on the next 10. So what I found really interesting, and I said we would go back and look at this, is let's go back to this over here. Sorry, I should have opened these all earlier. Let me just go through them quickly. So this is what I wanted to show you. So this is I'm going to put this actually into the chat box. Chat here. And I'll put this in. That's 3 things now. So Kelly, I want to put this link in for people as well. So I found this really interesting to read. There's a lot of detail. So again, if you don't like detail, you don't have to go through all this stuff. My job and the team's job is to take it and to use it for you. But what's interesting is that the overall message in commercial real estate, now remember, this is just for America. So it says here, emerging trends in real estate 2025, but it's only for America and Canada. But it's quite a good sense of what's happening in the rest of the world. So what's interesting basically is that, again, if we look at the highlights of commercial property, and if you go back to this white paper here, you should all have this white paper, but if you don't, I can share it as well. So this is the one from the Investor Summit. So this is the white paper and the key takeaways. And what I'm going to do is do both of them at the same time. So her key takeaways, and let me just stop sharing because again, I want to keep this simple for you. There's $1 trillion, 1 trillion with a T, dollars in debt coming online, which basically means that it's due for renewal in 2025. And of that $1 trillion, about 25% is expected to be bad debt, like effectively going into foreclosure. So what they said was they've got some funny words in America. They've always got, but basically what she said is that they sometimes are trying to kick the can down the road. So they sort of just let the operator who's borrowed like kind of keep going and kind of extend and pretend. So that was the word, extend and pretend. So extend the length of the loan and pretend it's fine and kind of hope the market recovers. And what they're saying is that 25% of the commercial real estate market in America is coming down. Okay. Now, if you go and read this, some people would be like, "Oh, that's terrible. Like, I don't want to lose money." but actually it's in those moments where there's a lot of opportunity. So what this white paper is about, and again, I'm just doing real summaries here because everyone has the ability to go and read this, is that the CRE is in a storm, rising cap rates. So what that means is so cap rates are how you value property based on income. And if the cap rates are rising, it basically means that the value of the property is going down. So rising cap rates means there's more risk in the market, and it means people want a higher return to buy those assets, which basically means people have to sell the property for lower values. So you basically got properties going down, you've got higher vacancies, which means you've got more open space that's not being rented. You've got defaults climbing, so that's where people can't pay the bank back. And you've got credit tightening, the bank's lending less money. The best operators will master agility, relationships, and creative capital stacks. So capital stacks is how you borrow money. So it's like I borrow 60% from the bank, 30% in mezzanine, 10% in equity. It's called the capital stack in terms of how it works. Multifamily, which is where you buy the whole building with like 600-700 units in it. Industrial and retail are more resilient than office and hospitality. Debt funds, agency debt present key relationships. So most of you who've been around a while will know this. We've been talking a lot about debt, done multiple debt deals. Our latest one was just in Manhattan. Prioritize resilient asset classes, so multifamily and industrial. Use AI to audit your pro formas, leases, and underwriting. Consider agency debt, so Fannie, Freddie Mae. Okay, so that's not necessarily relevant for us, but it is relevant when we look at our sponsors and what debt they're using. Know your hyper-local market better than anyone. So again, remember this was talking to Americans that are investing in America. What we need to be looking for, which we're going to go through in Module 5, is how do we find partners that know their market? Lock interest rates. So again, that you're not in risk, you lock the interest rate and let go of losers, like get rid of deals that aren't working. In terms of the state of the market, again, you can read through all of this, but this is the important part here. There's $1 trillion in debt that is maturing this year, and 25% is in risk of default. And then what I liked here was the different sectors. So you can see here multifamily, office, industrial, retail, and hospitality. And it had the market status, it had the lender appetite, so that's the banks to lend. You had the loan terms, and you had key investor considerations. So again, there's lots of very, very valuable information here in terms of the process. Strategies to navigate the storm, re-underwrite. So again, this is if you had your own deals. Know your lenders, optimize the capital stack, negotiate term sheets, and build in exit flexibility. Use tech and AI, creative deal structuring, and personal leadership. And in simple terms, like for us, none of us are buying a property on our own. So for us, it's all about the partner. So just yesterday, Paolo and I had an amazing meeting with the partner that we're bringing next week on self-storage. And it's so interesting. I met this person. His name's Claire Hoover. I met him face-to-face at the Investor Summit. I just like the guy. You'll learn more about this when we do partners. But I just liked who he was, his values, his integrity. He's been doing self-storage for 24 years. He's got 6,900 units and 31 facilities. He's in the top 3 vendors in America that the brokers come to sell self-storage to. And what I loved so much about his story was he said, so what we do is we go and buy mom and pop operators. So a mom and pop operator might be running a self-storage and it's got a revenue base of like $1 million or whatever. And their cost, just the human cost of sitting there is like $60,000. And he says, we get rid of, like we buy it off them, obviously, and we get rid of the humans. We put in tech, and it all runs with tech. And suddenly you've just saved 6% of your operating cost on the total income, like it's your net operating income. And if you can cut your cost by like 6%, your income's gone up by a margin, which automatically means your property's gone up. Are you with me so far? Like you can cut your costs and you can increase your income, you're getting a double benefit. And in commercial property, that means the price goes up. So that was the one thing I loved, okay? And then the other thing I loved was he said to me, Scott, he learned it from Blockbuster and something else. But anyway, he read a book from a guy that started Blockbuster and some other thing where it was small amounts of money. And he said, you can put up the marginal cost by 10% and no one feels it. So put it in perspective, okay? You're in America, you got all your shit in a self-storage, it's costing you $80 a month. And they put up the price by 10%. So it goes from $80 to $88. Now you're there on a Saturday, you're like, $8. Like it's coming off your credit card. You don't even notice it. Okay. And you're not going to move down the road. You're not going to have to go and hire a truck and move and all the hassle for $8. No one's going to do it. And then 3 months later, you put it up by another 10%. So now it goes from $88 to whatever it is, $96, $97. And again, you're like, it's $8. Like you're not going to do it. But you do that 4 times in a year, you put the rent up by 30, 40%. Now, you do that with residential property. I got a tenant, $1,000 a month, and I put it up by 10%. That's $1,100. They're like, whoa, hang on, that's quite a lot of money. What are the other units around here? Like, how much are they going for? If I put that up 10% 4 times a year, that person will leave, guaranteed. Clever, eh? Very, very clever. So why this is so interesting is that he's getting returns of IRRs, internal rate of returns, of 20 to 40%. Now, I know you think I'm crazy. I saw it with my own eyes last night on the performance. Now, I like to be conservative and talk 20s, but even 20% is much higher than 15%. So anyway, so why I'm talking about this in terms of the commercial markets is one has to look at the country like we're trying to do now. And then one also has to look at the region. And then one also has to look at the sector. So I also had a meeting, today's Friday, on Wednesday night with 2 people that do data centers. Now, I'm jumping ahead now, actually, because this is 2 weeks' time when we do asset classes. But just some simple thing on data centers. The demand for data centers doubles every 6 months. So it's growing like that. But the supply is constrained because the supply is based on electricity. And I can't remember the stats exactly, but it's something like to build a data center takes the same amount of electricity as like 140,000 houses. So the amount of electricity 140,000 houses use in a year, a data center uses in a month. So you're a politician and you're like, right, vote for me. And if I sign off this data center, like 140,000 houses don't get electricity. You understand the problem, the parity problem. So you've got data centers. So on Wednesday night, they were telling me there's a data center outside Salt Lake City where Amazon, AWS, spent $880 million. $880 million. It's built. It's been built and standing for 2 years. And Utah, which is Salt Lake City, basically said, build it. And then when it was built, they were like, sorry, we don't have electricity. So can you see the inverse problem? Demand, supply. That equals money. Are we on the same page, everyone? Seeing lots of glum faces. I don't know. I get excited by this shit. So for me, now let's look at it. So now let's go to here, because back to countries, you know, there's no doubt that America is one of the leaders in terms of where the world's going and commercial and everything in between. So now you go into this, and this is really interesting. I mean, you can go read the entire report. I mean, the next page actually has the entire report. I don't even know how many pages there's there, 138 pages. I mean, you can go read the whole thing if you want to. But why I like reading the synopsis up front is it's interactive. So you can literally go like through the markets. But right here in the middle is Texas. So you've got Austin, you've got Texas, you've got Houston. They call it the triangle, those 3. So Texas is a great place to be. Florida is a great place to be. We don't do anything in Charleston, so I found that interesting. New York, this one here, Detroit. I would never invest in Detroit, but yeah, fair enough. Columbus. By the way, the other thing I enjoyed yesterday that the guy said, Nashville. So the other thing he said with self-storage that I enjoyed, he said, we only do the southeast of America. We don't do snow and we don't do hurricanes. He basically said we don't do admin. Like we don't want hassle. So, and I just thought, again, like regional. So really interesting. Now let's look at these trends, okay? So if you go into this a little bit, and let's just go down like to this thing here, you can see the different chapters. You can see the different property types. So they go into all of these in detail. You can see the markets to watch. Okay, so again, Dallas, Fort Worth, Miami, Houston, Tampa, Nashville, Manhattan, Detroit, Columbus, Charleston, New Orleans, And then down here, where's it gone now? Oh, the big trends. So where did I see this now? Oh yeah, trend one, industrial. So I mean, we've been telling people about industrial like for a long time. Data centers, senior housing, retail resilience, and life science. Okay, I need to read more about that because I don't fully understand what that means. But the top four, we're already trying to do. Retail resilience, I met a guy at the Investor Summit. This is exactly what he does. So he will probably be the speaker for next month at the Mastermind in terms of that process. So yeah. Okay, so let's go back to the countries. But can you see the trends in terms of what we're talking about? The last thing I would say around data centers, which I find fascinating, is that whether you invest in crypto or AI or Bitcoin or flipping anything that's online, the internet, anything, e-commerce, anything, every single thing that is online is on a data center. And if you think online is growing, then data centers are going to grow. Fact. Every single thing online is creating data. That data has to be stored. Just the mere fact that it has to be stored means data is growing. That means data centers have to grow. Sure, technology is going to get better and better, but data centers still have to grow. It's like so common sense. So it's that old adage, you've heard it 1,000 times. You know, when there's a gold rush, don't try and figure out whether you should buy Bitcoin or whether you should buy property. Sell the bloody shovels, because everyone needs a shovel and a gold rush. And that's my thinking with data centers. And if you take long-term trends with regards to self-storage, everyone's got like lots of junk and their houses are getting smaller. There's lots of divorces. So family units are getting smaller. People are storing stuff. I live in a 5-bedroom house. I still have stuff in storage. I've got 2 massive garages and I still have stuff in storage. More and more people have it, and I'm in South Africa. And I know that we've got a number of people that are part of our mastermind that have done really, really well in self-storage in their respective countries in terms of that process. Okay, so any questions here in terms of these countries? I mean, the United Kingdom, back to your question, Alan, you know, I think in the commercial space, there's good opportunity in England. I know when Brexit happened, there was actually a 20% decrease in commercial property. Germany, you know, we've been trying to get in Germany for ages. Canada is an interesting one. I haven't done Canada. I don't know anything about Canada. In fact, I'm embarrassed to say I've never even been to Canada. I don't like cold weather, just for the record. Australia, we've been doing Australia since 2009. And if there was one emerging market that I'd love to get into more than anything else, it would be India. And again, Dubai is on the radar. So I would probably say those top 8 would be of a lot of interest to us. But we don't have partners in Canada, India, or Dubai at the moment. Okay. Any questions thus far? Have I missed any? Sorry, I wasn't watching the chat room. Can I move off commercial? Any questions on commercial? Rail's asking, how would a 25% default affect the Manhattan investment? It wouldn't, Rail, because they're using private debt. And also, I mean, if you look here, let's just go back to that document. Am I sharing my screen? Yeah, I am. So let's just go back to that exact document. Sorry, I've got to go through all of them. I don't know where it is exactly. Manhattan is one of the top markets to look. There it is there. So because of the knowledge, I mean, it's like London or Sydney or Hong Kong. It's the financial capital in terms of that process. So I mean, you've got 50 units that close literally 1.5 k's from the New York Stock Exchange, etc. So yeah, it's I don't think it'll affect it, to be honest. Okay, I just want to see in the main chat if there's anything I've missed.
Yeah, we've got 2. There's one from Gavin and there's one from Kevin.
Okay.
Kevin.
So Camille said, I think think that's why the US government issued $1 trillion work on government bonds for sale. Okay, I don't know that, but fair enough. Just by the way, Camille, I don't go out and like research information and stuff like that. For the mastermind members, you'll know what I mean. I turn up every Wednesday, it's next Wednesday, and Anthony turns up and he takes us through an entire presentation. It takes 20 minutes and he teaches me all the stuff I need to know. What is happening in the world? What is the geopolitics happening? How's that influencing markets? What's happening with inflation and interest rates and all that sort of stuff? So when the American government issues $1 trillion worth of bonds, oh, that's a great question to ask on Wednesday. And it's really interesting. You can call me lazy, you can call me whatever you like. But once a month, I get the update on what are all the important stuff I need to know. So I don't have to spend all month like scouring every news source and is it valid or not, etc. I find it invaluable. Would there not be opportunity in power utilities given the demand? Yeah, so actually, it's really interesting that you said that, Kevin. The guy that I met on Wednesday night, so I met two different people, and one of them was actually in the power utility services delivering to data centers. So yeah, we were exploring it. Again, I don't know anything about it, but we are exploring it in terms of that process. A lot of the interesting thing when it comes to data centers nowadays, though, is actually these self-service data centers where they're smaller, they're the size of a container, and they actually provide their own electricity through solar and gas. So again, the guy we met on Wednesday was doing these. So you're not doing the megawatt plants, you're doing the smaller ones, which are a lot more sustainable. Canada's hot in summertime. Yep, I know it is. My mate keeps wanting me to go there skiing, and it's like -20. Yesterday, the guy from Alan Gray also spoke about selling shovels. Cool. Yeah. So what Derek's talking about is Derek's on the board that manages a massive, I think it's a pension fund. And Alan Gray is one of the biggest financial houses, well, certainly in Southern Africa. And they were talking about data centers yesterday. Look, the problem we got with data centers, it's clear, is that there's a gold rush in data centers and there's billions of dollars going into data centers. So when they said to me, what check size would you put in? Put this in perspective. The biggest deal we've ever done is $6 million. When they said to me, what check size could you do? I was like, $10 million. And because I knew we had to play big. No, we have to play big. If I told them $500,000, they wouldn't even, like, that'd be the end of the meeting. And even $10 million, they're like, normally kind of, 20 to kind of 40 million's the entry level. And I was like, just get us a foot in the door and then we'll show you. Like, so yeah, my feeling on this, and I don't know if I've ever told the story, I've got lots of stories, I just don't know which ones you've all heard. But when we did our first medical building, we spent a year looking at buildings, then we'd run back to investors and say, hey, investors, do you like it? And we'd go back and they'd say, yes, we'd go back and try to buy it, and then it was gone, because in America, stuff happens quickly. And we're sitting around the table, and the partners we had on the ground, it was a $16 million deal. We had to put $6 million in equity. And they were like, Scott, are we going to do this? And we didn't have $1 committed, not one. And I was like, we'd spent a year, though, getting people excited about medical. And I was like, do it. Now, to put in perspective, if we failed, we put down a $300,000, what's called hard money deposit. So if we didn't raise the money and we walked away from that deal, we would have lost $300,000. Anyway, where there's a will, there's a way. And we went out and we raised the $6 million, and the rest is history. We ended up doing hundreds of millions of dollars in medical buildings. That's how I feel about data centers. I fundamentally believe that if we can get the first $10 million done, we'll get multiple opportunities. And in the next 10 years, like, I don't think there's one asset class, arguably in the world, but even specifically in real estate, that would be a better opportunity to get into. But the problem is we're dealing with every big fund in the world as well. So what we got to do is be light and nimble, quicker. We can be more industrious than all the MBAs that will take 4 months discussing what to do next. Would it be an opportunity to look into energy companies that would supply power? So yes, Gavin, definitely. Okay, where was I? So let's go back to, so I think that's all the commercial questions. And then how are we doing on time? Okay, and then I want to go to, so just to be clear, this is the CRE white paper. So if you really want a lot more detail on commercial real estate in America, I would read this, and I would also read that that big thing. If you really want to go into all the detail, I wouldn't necessarily go into all that detail yourself. But if you want to go and read it, like really a lot of detail, then here's the full report. And I've already put the link into this for you. Okay, so let's go to alternatives. So in terms of alternatives, so remember with alternatives, there's something important here. And if you take residential, remember when we did residential, I took you through the fundamentals. So what are the fundamentals of investing, this is probably one of the best lessons I learned from multiple different people. When you understand the fundamentals, they do not change. Markets change, sentiment changes, but fundamentals never change. You might want to write down what I just said there. Fundamentals never change. So when it comes to property, what are the fundamentals? Well, the economy. Okay, so what is happening in the economy? It's the first fundamental. Secondly, what's the value of the property? Am I buying it below market value? Am I buying it? Is it too expensive? Thirdly, is there growth? So again, supply and demand. Is the population going up? And are there too many properties being built? Or like is there more demand than there's supply? So as long as there's more demand than there's supply, then the market's healthy. When it's the other way around, you've got a problem. In Ireland in 2008, 1 in 4 homes that was built was sitting empty. It had a massive crash. It's common sense. In America, 10 million homes were built and sat empty in the 2008. We had the GFC. Right now in China, does anyone know how many homes are sitting empty in China? Anyone? The last time I did research, 60 million. 10 million in America created the GFC, 60 million currently in China. So anyway, that's the supply and demand. And then the last thing is rule of law, which hopefully, back to Alan's question, is common sense, but unfortunately people seem to ignore this one. So you put all of that together and you ultimately get a risk index. Okay, and your risk sits at the bottom. You can see here, low risk, high risk. And then on the right-hand side, you got your return. Now, again, you can make this 50-50. I mean, that's the beauty of the spreadsheet. You can play around with it. You can make it whatever you like. Okay, I don't agree with that because I've learned from wealthy people that there's got a much higher weighting on income than they do capital growth. So I've worked on 70-30. But then you've got yield, which is your income, and you've got capital growth. And you balance those two out, and it gives you a return index. And basically what that does is you've got on the bottom risk, and on the left-hand side, you've got return. Clem Sunter taught me how to do this, by the way. And so you ultimately want to be in this high return, low risk category here. But what's different, it's the same for commercial. So you can see the fundamentals are the same. But what's different for alternatives is it changes. So you've got economic risk. Obviously, that's a factor in the country. You've got access to alternatives. So most countries, you don't even have access to alternatives. In South Africa, there's no way to get access to alternatives. Unless you've got lots of money and you're invited by private equity companies, no one talks to you. Then you've got the kind of the VC innovation market. So this is just one. There's not two here. It's just one. And then you've got rule of law. So it's different. It's slightly different. 3 of the 5 are different. And then basically, if we go back to here, you can see, like America, I mean, everyone knows that venture capital in America, there's more venture capital in America than anywhere else. I found this one really interesting, Singapore, number 2. So we do have 2 people in Singapore that we've been looking at opportunities with. So that's really interesting. I didn't know that. United Kingdom, hopefully fairly self-explanatory. Canada coming up again. So really interesting. Again, never done anything in Canada. And then Switzerland, number 5. Now, on Tuesday, you're going to learn about the Swiss franc, by the way, and how that's a currency we should all be investing in. So, yeah, clearly we've got to be doing some alternative assets in Switzerland. Number 6, Germany. Number 7, Australia, France, Japan, and the Netherlands. So the carry fit deal at the moment is in England. The debt deal in America is in America. For those of you who are shareholders in our company, that is equity, which is held in England. So just showing you in terms of these markets. So again, any questions when it comes to alternative assets? Again, we at the moment, we've actually only focused on, for alternative assets, we've only focused on the United States, United Kingdom. We've done structured notes out of France. We haven't done anything out of Australia. No, it's pretty much been the United States, United Kingdom, and 1 out of France, I think, if I remember rightly. That's pretty much it. Okay, Rail's asking, when can we expect the self-storage to appear on the platform? I'm not sure, Rail. So I sent it out to the mastermind to ask their appetite, because I want to see if there's appetite. It'll be the shortest closing we've ever done. So it's closing on Wednesday in 10 days' time. And we've never done something that quick. So I asked people to tell me what they would want to invest so that I know if there's appetite. We've got to get at least $100,000 or more. Otherwise it's non-starter. But if we can, Paolo wants to get it live by Wednesday. And then with people that have funded their wallet already, they make their commitment, we'd close it on Wednesday, because we'd have to close it Wednesday, move the money Thursday, so that it lands in America in time for closing the following Wednesday. Scott, is alternative asset investment possible with your family office? Yes. So that's the only place we get them through. So I don't really have any experience other than through structured notes. But Calio Private Equity, which is our family office team, is the one that's bringing our alternative assets. And let's just go look here quickly. I mean, if you go on the current Wealth Migrate platform, I'm just getting it open for you here quickly. We've actually got 2 alternative assets right now on the platform. So, so if I go in, I'm going to log in quickly for you live. So there's 3 deals live at the moment. And I mean, that's an alternative asset. It's a debt opportunity in Austin, Texas. And that's a private equity opportunity in London. So both of them are alternative assets on the platform right now. And they both came through Calio Private Equity. Mike said Switzerland has 39% tariffs now with the US. Interesting. I don't know what that means, Mike. I have no idea. Like, is that a good thing or a bad thing? I mean, the whole tariffs thing is very confusing to me. So yeah, I wouldn't know where to start in terms of trying to get an alternative asset out of Switzerland, which is why we would lean on our family office. So, ladies and gentlemen, that's alternative assets. Are there any questions around? I mean, there's been lots of brilliant questions. Are there any more that I can help with in terms of countries in general? Are you all clear on kind of the homework? The most important thing for you to do is to go to the sheet. So again, I just remind you, you go here, you go down to your homework down the bottom, and you literally go here and you open up your sheet. And it's just a Google form. But the reason being is that if you do your homework every week, at the end, you're going to get an investor strategy sheet printed for you. Boom, done. So you'll have your wealth plan and your investor strategy sheet. So it should look like this. Now, you should have your top 5 residential, your top 5 commercial, and your top 5 alternative. And you don't worry about the currencies, that's next week. And don't worry about the assets, that's the week after. So you just go submit. And the nice thing is it comes up here. What's it done wrong? What have I done? Anyway, it comes up and I don't know why it's not letting me, but anyway, your username and responses will be recorded when you submit this account. Okay, whatever it's saying. But anyway, once you submit it, it comes up and then next week we can use the same thing and we can edit it. But this is really important, And if you don't know what to do, I don't know, screenshot mine and copy it. So there's my residential. There's my commercial. The reason I have 6 here is because that's United States twice. Like for me, I think that's 1. I would call that America. And then the top 5 alternative. So what else can I help you with? The whole idea with the Q&A is for lots of Q and more Q and less A. More questions and less me talking. Is this helping? I mean, are you starting to kind of get context of how this all comes together? Yeah? Americans will pay 39% more for goods from Switzerland. Okay, yeah. They're expensive goods anyway, so it's like if you're going to buy an expensive Swiss watch, you're going to pay for it anyway. So, which may affect the currency. Yep, maybe. So you'll notice, Mike, the way I always defer to these things, like, I don't know, let's ask the expert. He's coming on Tuesday, and get his feedback. Because on Tuesday, James is doing currency. By the way, you really want to be at the session with James. Like, he's what I call a propeller head, and like, he's really, really detailed, and it gives you a really fascinating perspective of how currencies work, how sentiments works, even down to economics and stuff. It will give you a really, really good understanding of why things happen. Lee said, hi, Scott, is there an alternative to Google Docs for those who don't want a Google account? Are there people like that? I'm sorry to say that. I don't know. Yeah, I suppose the piece of paper, my spreadsheet, I don't know. Literally just go and choose your top 5 countries and write them down. I'm sorry, I didn't know there were people without a Google account. Okay, are the lines on your ceiling your heartbeat? Oh, I didn't know that. Oh, wow. Sorry, I didn't. That's weird. Normally it's my background. I don't know if I've had my virtual office background on. No, it's just a virtual office. Sorry, I actually didn't realize you guys didn't have me on my normal one. Where may I find the Google report homework? So again, this is really, really important, is that if you go in and you go to the top here and you go to Classroom, so you're in the Wealth University, you go to Classroom, you go down to Wealth Going Global, and then you can literally see, like, you've got module 1 and module 2. Just by the way, after today, to make it easy, because I have been putting the Q&As up here in the community, but to make it easy, I'm going to put the Q&As here as well. So you'll have, like, now you'll have module 2, and then today's recording will be Q&A module 2. So it'll be really easy. You'll have the Q&A here, you'll have the Q&A here, and you'll have the Q&A here. So I don't know why I didn't think to do that earlier, but it should be a lot easier for people to navigate. And sorry, I probably should go in more detail. Then if you go to module 2 and you go down to homework, it's always the same. So go into the module, go down to the homework at the bottom, and then there's the link to the Google Doc, or you can go here, it's the same link, it's just in two different places. So the links are always in the to-dos and always in the resources. If our logic is everything's in the course. So every time you want to go back, the recordings, the links, the resources, everything's in the course. Which is why I try and say to Kelly, look, just keep pushing people back to where the course is, because that's where everything is. Like, WhatsApp's just there to help. Scott, as a South African looking to invest in alternative assets, do you prefer depositing more money in the platform? Because you said it's really hard to get alternatives. Yeah, so I haven't done any alternatives in South Africa. Nothing. I know our family office actually has a few opportunities, and I was talking to Garth this week, when was it, Monday or Tuesday this week, about possibly bringing some of them to the market. But it makes it more tricky when stuff is RAND-based. And because we're a global platform, we're tending to want to look at global opportunities. And again, I'm sorry to say for South Africans, but South Africa is number 20 in residential, number 20 in commercial, and number 20 in alternatives. So it's kind of like at the bottom of the totem pole. It's still on the totem pole. I mean, there's 204 countries in the world, so it's a hell of a lot better than 180 something other countries, but it's still number 20. Natalie, I don't know what I'm funny about, but anyway, all good. I'll take it. Friday afternoon. Cool. So I hope that helped in terms of the process. I can see Rail's got a question. Let me just go check quickly. I meant in terms of what can the realized exit. No, so the realized exit for the self-storage it's a 5-year deal. So the headline numbers are their target return is 20%. Their average, so remember the average cash on cash over time, because it's going to go up, is going to be 7% and above. And the exit time frame is 5 years. They've got their debt fixed in already at 6.8. So even though the expectation is interest rates come down, they don't have to rely on that in terms of that process. And I've already told you how they increase the value of the property. They're not relying on the market. They're using their own dynamics to increase the value of the property by bringing efficiency through technology and by increasing the rents, proportionately per quarter. Okay. Yes, always very helpful. Thank you, Safina. Camille, Scott, why don't we use the DeFi model where we can use your cryptocurrency to buy investment products? This should circumvent a lot of the red tape. Oh, I wish we could. I mean, again, if anyone wants to read the white paper on the wealthy coin that came out in 2017, I mean, I never thought we'd get to 2025 and this wouldn't really be, mainstream yet. Very simple answer. Lemonway, which is our digital wallet provider you all use, will not allow cryptocurrency. I have met with the CEO and COO in Paris face to face. They would love to do it. The regulator in Europe would love them to do it, but the banks that back them will not allow it to happen. You're dealing with so much inertia in the system, it's actually very difficult. Minimum investment for self-storage, I don't know, Chiba. So it's Mastermind's getting first access, and then we will make a decision. I don't know exactly. It might not even get publicly open. And by the way, it doesn't matter if this particular one doesn't. These guys, do a new one every 2 to 3 months. So we'll just bring the next one. But this is just a unique opportunity. It closes in 2 weeks. If we can get our money in, we'll be in the building at the end of August, and we'll be getting paid by the end of September. Okay, all. Well, I hope you enjoyed countries. I love doing the research and looking at what the top countries were. I also love the fact that I've now programmed ChatGPT with all the models, which will just make this easier and easier, as you can imagine, over time. And next week it's all about currencies. So I look forward to going with James on currencies. Oh, one thing that's really important. Remember, next week is 2 hours later. So again, if you go to the calendar, Tim, I'll come to you now quickly. Let me just show everyone before I come to you. If you go to the calendar over here and you go to Wealth Going Global, you'll see here that on the 12th, it's at 2 p.m. Okay, why is that 12 p.m. one showing? Okay, Kelly, we need to get rid of that. No, I'll sort that out just now. But anyway, it's 2 p.m. So I actually want to delete this right now. So there you can see it's at 2 p.m. I don't know why that 12 p.m. one was there, but it's really important this week coming up, the 12th is at 2 p.m. So 1 p.m. UK time. And the reason being James Painter is in... Hang on, I'm going to mute everyone.
Yeah, we must be ready at 1.
How long is it for?
Okay, so just be aware of that. Tim, how can I help? If you just want to unmute yourself, I'll mute everyone. Tim, can I help? You got your hand up? Okay. We've lost Tim. Not sure where Tim is, but anyway, maybe it did one of those things. I had hand recognition on it, but like do thumbs up, and anyway, I managed to figure out how to switch it off. Safina, thank you. I will just say we're in the middle of winter and it's the most remarkably beautiful day here. So anyone who's coming to the Wealth Weekend will get to experience the magic place that we live in. So yeah, it's a very beautiful day. I'm very pissed off because I'm still waiting. My boat's broken and I'm waiting for, I've bought a new one. Well, anyway, I'm waiting for it to arrive. So I'm a land dweller. I can't go on the water. I don't know what to do with myself. Anyway, so that's my big problem for the weekend. Chiba, I'm glad you enjoyed the session. And yeah, if there's anything else, please let me know. Otherwise, I'm going to call it for today in terms of the process. I hope you enjoyed it. Cheers, everyone. We'll see you on Tuesday. Bye-bye.